Welcome to The Long Haul, the podcast dedicated to empowering small carriers and owner-operators to drive their business forward. I'm your host, Adam Wingfield, bringing you insights from industry leaders, real-world success stories, and strategies to help you navigate the road to profitability. Whether you're just getting started or looking to take your fleet to the next level, this is the show where trucking meets opportunity. So buckle up, it's time to go the distance. Welcome, everybody, back to another exciting edition of The Long Haul. As you know, my biggest focus of these podcasts is straight information and to put some tangible action to you. Today, I'm really excited because there's no better time to talk about money than right now. And I'm excited to be joined with our guest today. Our guest today, and the person who I have a pleasure of speaking with and interviewing, is the founder and CEO of Provision Accounting Solutions. She's known as the Money Architect and is a seasoned accounting and tax strategist with over 15 years of experience specializing in transportation and logistics accounting. Her expertise has led to a remarkable 35% increase in net profits for businesses in the industry. She holds a bachelor's degree of accounting from Strayer University and an MBA from Webster University. Beyond her professional achievements, she's deeply committed to community service, offering financial literacy programs and mentoring women in transportation and logistics. Her holistic approach not only optimizes profits, but it also reduces tax liabilities while ensuring compliance with federal and state regulations. We're excited to dive into her insights and financial management for owner operators and small carriers. Ladies and gentlemen, Vanessa Gant. Welcome to the show, Vanessa.
Thank you for having me, Adam. Excited to be here.
Excited to have this conversation. It's no better time, man. We're closing upon that March, which we're at right in the middle of March, getting close to that April 15th deadline. So I figured this is the best time to have that conversation with you now. So super excited to have you on the show today. So let's back up a little bit before we even get started. Tell us a little bit about Vanessa Gant. I want to know a little bit about you. I know the audience want to know a little bit about Vanessa Gant.
So outside of all the numbers, outside of taxes, outside of trucking, I love spending a lot of time with my family. I'm a foodie, and this past weekend we just had the Charleston Wine and Food Festival. It's great. It was great to get out there. Getting back into reading, and it's also track season. So my kid is doing long jump and running a 4x1, so I'm outside a lot. So a lot of family stuff. Love the beach. We love food. So that's basically what's happening around here.
And now that's all you're in the perfect place for it. Charleston, South Carolina, no better place for food. And that's I love the low country. Tell me a little bit about your journey. You know, you went to college, got, obviously you had the MBA experience. What made you decide to get involved in a trucking space? Where did that come from?
So interesting journey. I actually worked in a manufacturing facility and went to school while I was working there. And as soon as I got my associates, I went on to work for a freight brokerage. And when I got to the freight brokerage, it just everything started connecting because it didn't mean anything to me when I would see a semi truck with a trailer on the back that said Merce or Yang Ming or, or Zim lines. Didn't know what it meant. But working at the brokerage, I learned what all of that meant. It started connecting. It's like, this is how we get things. This is how this stuff ends up in my house. And from there, I was handling an account for a carrier that was expanding to Charleston, a trucking company. And I was actually with him as he was founding all of his terminals. And when I got over at that trucking company, that was all she wrote. I started, as an AR clerk, and by the time my tenure was done there, I was a director of accounting. But so for me, the numbers are easy. Most of my clients, the numbers are a little terrifying. So I could easily do my job. And, some call it nosy, some call it curious. I went around to other departments to figure out, how did these things get to my desk and what did it mean? So I learned how to read, the bill of lading. I understood the systems that we use to be able to talk to the steamship lines, understanding what it meant to have a driver file and to do all the safety. So I essentially, in my free time, walked around and learned other people's desks, and it helped me understand my job better. But to this day, what it has done was made me a valuable asset to my clients, because you're not just working with someone who has the education, but you're working with someone, the tax and accounting education, but you're working with someone who has a hands-on experience of what it takes to run your trucking company beyond numbers, but understanding how all of those things connect to the numbers.
Yeah, so you're mentioning steam lines, you're talking all of the steam line jargon. So it sounds like you got a little bit of dredge in you.
Oh, a lot of it.
Dredge is your baby.
Dredge is my baby. I've expanded to a lot of things, but Dredge was my baby the entire time that I was in corporate. Just being able to move through those systems, you start talking about demerge and rolling bookends and
That's a whole different
stuff.
conversation, right? We have a whole different podcast about dredge, but that's really unique. And so, so you're in the dredge space. You're obviously Charleston's big on the port side. What really got you into moving into the space of, hey, you know what? I kind of want to start doing my own thing. I want to really start helping owner operators and small carriers. Where did that shift come in?
Besides being able to have the flexibility from my family, what I started to see was there were a lot of, owner operators or smaller fleets that would lease on to, the mid-sized carriers, and
Drayage,
they would say that again?
drayage carriers. So you say the owner
Drayage
operator.
carriers.
Okay, yeah. Oh,
Yep,
okay.
they would lease on to them, but their behavior and their outlook was as if they felt like they were working for that company and not for themselves. Right. And it started because I wanted to help create the mindset shift that if you start understanding that you are operating your business and you are not an employee of this company, you will handle your finances and your decision making better because you're operating in the mindset of this is my company. There used to be this thing, back then when it was no drivers came a dime a dozen. Or it's like, a lot of the truckers are fleet. I was like, oh, I get another check on Friday. I get another. So let's stop looking at it as this, I get another check on Friday. And let's start looking at it as like, I'm going to operate this as my business. Being able to educate them on what they needed to know about having their own authority, right? That financial gap between that. They just didn't know. So I wanted to help smaller fleets and owner operators understand that you can have the same level of success as that company that you're leased onto, your level as that company that you're leased onto. If you shift your mindset from I'm operating my own business, you watched your finances and you put some work into it. And it's worked for a lot of people. Some people, it hasn't worked because they like not having to put in as much work. But some of the ones that understood, hey, I'm already doing this anyway. I can manage my company, I can grow more, and I can, have more finances, more income.
The funny thing about that, you talked about mindset and really digging into really the conversation today. I think it's really important to focus on that component for a second. Many owner operators think revenue equals profit from some degree. Can you break down why that's a dangerous mindset and how they should be thinking?
So I want to do a step back and I want to say that not only do they think that revenue equals profit, sometimes they think volume equals profit. As long as my truck is moving, I'm making money and I'm making profit. And it's not always true. And revenue doesn't always mean profit if you're not managing your expenses. So when I start to think about finances and, a profit and loss statement, that's telling you where your money is going, a lot of times they're making the money and that's all that really matters. They're not looking at where it's going. When we start talking about industry KPIs and you start thinking about like, what is the average for my driver pay? How much should my drivers be making in relation to the revenue that's coming into my business? Am I watching my fuel? How much is my fuel percentage in revenue, in line with my revenue? Because if your fuel is running at 30 and 32%, it doesn't matter how much money you're making, you have a problem. Right? And I had one client, we did that exercise where we see the revenue is coming in the way that we need it to come in. So we started looking at the expenses to see what the issue was. And the issue was that his truck was idling. Right. And his fuel expenses were high. So had we not done that exercise, he saved over $1,000 a month. That's $12,000 a year. What can someone really do with that in their business?
That's just a lot. You hear right around this particular time frame, especially in this market conditions, you hear a lot about there's a lot of talk about carriers going under because of high operating costs. How much of that is due to bad financial management versus just the market being in a bad market condition state?
I would say a lot of it is financial management. The market has, if anyone's been in trucking long enough, I mean, the trucking goes in cycles, right? All the time. In the past couple years, we've had a lot of the same cycles happen at the same time, which wasn't usual. But when the market is fluctuating, your KPIs should still be aligned with the revenue, the standard. It should still be aligned. Now, there's some cases where it may be high, but it could be an indicator that you have an equipment issue. Finances, we're thinking about financials and just how much money is in the bank and how much profit. But if you're not looking at the amount of money that you're spending on fuel and the amount of money you're spending on repairs, you may not be able to recognize that you have an equipment issue or you may have a staffing issue, right? You may be paying for subscriptions that you're not using. So it's definitely how I like to say with the profit and loss statement. A lot of the times we're focused on the top, which is a revenue, and we're focused on the bottom, which is a net profit. But it's in the middle that's really shaping your business, and that's really determining what your business is going to do and how successful your business is going to be.
Yeah, that's a great point. And you talked about a little bit a few minutes ago. You was just talking about, you had owner operators that releasing on to other, other authorities. From that perspective, that we see a lot of things that go wrong when it comes to a lease on perspective. And I really want to kind of tie this all into financial management decisions. So how do carriers get trapped in these bad lease on opportunities? And talk about, like, give me an example of one of the worst examples that you've seen from a lease on. I know you've seen them all, but talk about what that looked like and how people get wrapped up in stuff like that.
To be honest, I feel like people get wrapped up into because they're lazy and they're afraid. The very
Oh, don't
first
s
thing it's true. The very first thing I hear is, so when I'm working with someone and they tell me that they're leased onto someone, I said, I'm not being rude when I ask this question, but why? I want to know why before I go into my spiel. Tell me why, because they may have a legitimate reason. Um, and most of the time it says the cost of insurance. I was like, you do know that there's a buffer. So someone's gonna come get me for this part. Like there's a buffer between what you're really being paid and what the person that you're leased onto is being paid. I understand it's the cost of business, but I'm like, you're missing out on so much money from being afraid of paying for insurance. Right. One of the biggest ones that I've seen is, when someone's paying 28, 25, 28% in commission to be leased onto someone's authority. That's when you add that up, you could have paid for insurance on 3 trucks. So my thing will be, now it may not be an issue for um everyone, right? This model may work for someone where, they're not the driver of their truck. It's a second or third stream of income for them. But if this is your main stream of income, I highly suggest that, you sit down and you look at what it takes for you to operate under your own authority if you're looking to increase your revenue and your profit.
Look at it both sides. Look at it from both ways, and then make a better decision on which way works best for you. So not really just to say, "Hey, this is a one size fit all," but just having the opportunity to kind of obviously do an analysis on which one will work best for you because you obviously, one shoe doesn't fit all feet.
Yeah, and it does. And you also have to like not I've come to this thing in trucking now when I have to say to everyone, because sometimes right now it's getting a kind of negative stigma depending on who you're talking to. So my thing is like, you got to focus on you. You have to focus on you, your company, and what your company goals are. You can't look at John and James over to the right side because they may not even be putting in the effort. Right. So, and I'm always going to say this, like trucking is never going anywhere. 99.9% of the things that are around everyone in the room they're sitting in came by way of truck at some point in their origin to your home. It's about getting in, figuring out what your lane is and making it work.
No, that's spot on. So, the crazy thing about that, you think about the folks, 95%, you talk about trucking not going anywhere. 95% of the capacity or the trucks that are in America are owned by trucking companies that have less than 10 trucks. So it's a small carrier driven economy within the trucking cycles. If somebody's running a one truck operation, how should they be structuring their finances every week? What does that structure should look like? What do you promote from the structure standpoint on financial management as a one truck operator?
As a one truck operator, and for the ones that 1, 2, 3 trucks and looking to grow, the very first thing you have to do, especially if this trucking company is your main source of income, is to create your personal and business budget. So many times I see it every single day. You're robbing the company to take care of your personal life, right? Because you feel like if the money is there, then I can move it. But you have to figure out what you need personally and what the business needs so that you can set your revenue goals in the business to meet them both. That's going to be very important because the robbing Peter to pay Paul sometimes is not because the rates are low. It's because your money management is poor.
Sounds like some commingling there.
Oh, very common with one truck users. So, one truck owners, definitely have your business set up as a business. Go make sure you have an EIN, you're registered with the state that you live in, have a separate bank account for your business and not your personal. If for some reason you have to use your personal resources to fund something in your business, don't pay for it out of your personal account. Take that money and put into the business. If for some reason you're unable to transfer the funds, keep good records and good documentation and your receipts so that you can also still be able to write that off as a business deduction at the end of the year. But building a budget for both personal and business and separating your finances from both.
So when you think about, so you got your personal, you got your business. Let's talk a little bit about cash reserves because that's going to be important when it comes down to establishing that. What's the ideal reserve just for an owner operator that's listening in? What would be a good considerable reserve that they should have before they even think about even stepping foot into buying or maybe leasing a truck? By taking them back to the beginning, what do they and typically what do you like to see on hand if you're advising somebody from a business perspective? How much do you think they need to have on hand?
So, especially if they're brand new, a minimum of 15K. And the reason why I say that is because, if you're brand new, and especially if you're not driving a truck, you may go through a driver or two. If you're starting with your own MC, the rules have changed a little bit. So you're not getting work, the next day. And you also need to be prepared for any issues that you may have with your truck. Now, and I need that 15K after you've gotten your truck,
This is
after
afterwards,
you've
right?
gotten your tag.
Right, right.
Yeah,
Yeah. Let's
after
make
you've
sure we
gotten your
make this
tag.
this clear. Right. Yep.
Yeah, after, right? After you've gotten the truck, after you've gotten your tags and registration, after you've gotten your insurance, I still need you to have at least that 15K. And that 15K usually ends up being enough to take care of a truck and insurance payment for 3 months. So, in the end, kind of putting it that way. But you want to make sure that you have at least that, especially in the beginning, because that's usually, in my opinion, the first 3 to 6 months for someone that's new with the truck, sometimes can be a little rocky and you need something to fall back on.
So when you think about you talked about KPIs earlier, and I think this is a really good kind of moment for that. What are those three? I always my advisement to small carriers is always have a business meeting with yourself. If you're a single business owner, it's okay to have a board meeting with yourself every week, have a board week meeting with yourself every month. And when I think about those board meetings, we're talking about, pulling out your financials, pulling out, your projections, taking a look at your equipment, look at how your compliance is flowing, and have an opportunity to kind of step back at the business and look at it from a 30,000-foot lens. So that way you can have better plans for the following period that you're going to actually be measuring upon. So when you think about that, what are three key financial reports from your perspective that every carrier should be reviewing, whether it's weekly, whether it's monthly, from an accounting perspective? What does those look like?
So you definitely want to be looking at your profit and loss statement. You want to be looking at your balance sheet and you want to be looking at your cash flow statement. All right, because cash flows, you want to make sure that you have enough money on hand to be taking care of, the business bills. The balance sheet, you want to you want to manage your debt and your cash, right? By looking at your balance sheet. Then your profit and loss, like you also want to see the revenue that's coming in and what's going out. But I want to take it a little deeper when it comes to revenue and tracking your data. A lot of the times I feel like, business owners, they think about, accounting as it relates to taxes, but I want them to use their financial data to make business decisions. I talk a lot about one of my things is like the seasons of trucking that has nothing to do with the actual seasons of the year. But what are the seasons of trucking in your business? And it comes from your financial data. If you're looking at your revenue and expenses by month and by quarter, now it allows you to plan. If you realize that in the first quarter of 2020 your revenue was up, your trucks were moving. Who did you work with? Right? Who did you work with in Q1 of 2024 that you should have been pre-gaming with in Q3 of 2024 to make sure that you get that same work in 2025?
So when you take a yeah, now and I want to pause just a little bit because I want to take you back just a little bit because you mentioned some three key financial reports, and I think the biggest question that you'll get, especially from a small carrier space owner operators, newer folks that are getting started, like, hey, where do I find those reports? Where do I find the balance report? Where do I find those? How are you generating? What are those things that? Take us into the steps on generating those particular reports.
So I highly recommend that everyone use an accounting software. I know that there are some TMS systems that say that they offer accounting with the TMS system. It's not giving you the full picture. Right? It's only yeah, QuickBooks. QuickBooks Online, and I use QuickBooks Online with all of my clients because, it's web-based and it allows a full transparency from my clients to be able to see in real time what we're doing, and also so that they can get their reports in real time. And once you're using the accounting software and you're connecting, all of your financial institutions that your company is using, we connect it to the software. We make sure that all of those transactions flow through seamlessly and get categorized correctly. And once that categorization is done, that's how it actually formulates that information is just put where it needs to be. And then we're able to provide the statements that each person should be reviewing for their business at a minimum of monthly. Weekly, if you're doing this weekly, I'm telling you, your business is going to flourish. It is going to do things that you have never seen before. But at a minimum, on a monthly basis, every single trucking company, I don't care how big or how small you are, should have reviewed most of those key financial statements.
But now, doesn't that open up another can of worms when it comes down to the word bookkeeping? Because at that point, some of those transactions may not get categorized and they sit into a queue, and all of a sudden you've got 1,000 different transactions with no category. Doesn't that open up a different can of worms, or is that part of your monthly review? What does that process look like?
So that's the part when we're connecting the financial, institutions to your accounting software. All of those transactions are going to flow in as they're happening. And if you do not clear them, your reports will be inaccurate. So we get some people sometimes say, "Hey, I'm going to do my own bookkeeping." And it was like, "Yeah, I'm ready to do my taxes." I'm like, "No." And it's what you just said. It's not right. There's 1,000 things sitting here. So all of your reports are inaccurate.
So if I'm an owner operator, I don't have time, Vanessa. Like, I might not have time. I might not have the opportunity. Is there a better way to do it? Or is it just something that I have to really kind of just like pause and step into it and just roll my sleeves up and get busy with it?
Absolutely not. You don't have to. Just call me. We'll take care of it.
But it's
Just
important
call
though.
me.
It's very important that it happens because when you look at your profit and loss statement, and if I'm going back and if I'm reviewing that balance sheet, the balance sheet is not going to include my uncategorized transaction. Is that correct? So that means I might be looking at a balance sheet that say, hey, you know what? Things look good to me. I might be able to take another step, but I'm really not categorizing the other transactions if I truly don't have a finger or pin on the business.
Yeah. So it's the thing of not having um real and accurate information. So even when they say they've done it, it's like, well, did you reconcile? Like, what does that mean? No, did we make sure that everything that's on your bank statement, your credit card statement has truly been accepted into your business? And sometimes, like we talked about earlier, what happens when, you have to personally give some money to your business. Maybe it's not cash, maybe you use your personal credit card because it was an emergency. You were out of town, your driver was out and they needed a tire and you used your personal credit card, right? How are you going to put it into the accounting system? Right. So it's a checks and balance that we do. It's something that manually has to be entered, but it's a checks and balance that we do. It's a question that we ask every single month when we're tying up the month and completing the reconciliations, getting ready to provide these reports to our clients. Did you use any personal funds to take care of anything in the business? Because we want to make sure that you have a very true, clear, and accurate picture of your business financials. So if you spent Yeah, so if you spent $5,000 on your personal credit card and you didn't tell us, you're missing out on $5,000 in tax deductions, but you're also skewing your profit. Your profit is actually $5,000 lower than what's shown on your reports now because it was missing that transaction. So it's really important. It's crucial to the growth of the business. Um, it's the step that a lot of small carriers believe that they can just forego, but it hurts you more in the end than it is to go ahead and get it done in the beginning. And it's always this. All businesses are looking for tax deductions. Hiring your bookkeeper or accountant is a tax deduction, one that you get an immediate ROI on, or you should.
You mentioned that, and the most important part of what you were stating was that when you do commingling and when you're not categorizing, you miss out on incredible opportunities to be able to lower your tax liability. And you really hit that just spot on, because there are going to be times where you might just pull out your credit card and just handle business, and then obviously not go back and do the steps that's necessary to make sure that you protect yourself, because every dollar matters when it comes down to that. And that's why it's really, really important to have these type of conversations, because they're not like, this is not a fun conversation. This is not one of the things that you look forward to doing. Nobody looks forward to bookkeeping except for you. Obviously that's something that you look with.
We love it over here.
You love it over there. But you got to, from a small carrier perspective, I think that that's a very, very challenging component, because time is such an issue, and I have conversations with fleet owners, small fleet owners, owner operators all the time. And really just boils down to time. It really boils down to time and the ability to have the time that's necessary to do that. And then you're balancing so much. I was talking to somebody the other day, with my roughest moment as a fleet owner is when I had 6 trucks. Because at that point, you have just enough, right, to keep the money flowing in, but then obviously you don't have enough to start paying people full time to be able to assist in those things. So now you're pulling your hair out, going one place to the other. So for carriers that want to grow into a small fleet, right? That, one truck carrier, from your experience, from what you've done based on, in your business, how do they prepare financially for adding trucks? You said 15,000, like, hey, I don't want to talk to you if you ain't got 15,000, in reserves. After all of that, that's a fair number. I'd say 15,000 is fair. Obviously it depends on inflation too. At times that might be more, but when you think about it from an accounting perspective, just from an accountant side, when you look at that, how do you have a conversation with someone who sits down and say, hey, Vanessa, I'm looking to scale my business. I'm ready to scale. You had the opportunity. How do they prepare for adding those trucks financially?
Financially, we're going to go back to, you have to have true and tried numbers. I cannot go off of you telling me, oh, I made 30 grand, I made 40 grand. I'm making a lot of money, because making the money and not keeping the money doesn't do anything for you. Right. So one, we need to make sure that we are able to review your financial reports. I want to know your plan for the revenue for that truck. I do. I want to know the plan, because we're not interested in just adding debt. And I do want to say this, like, I'm a calculated risk taker, and that's how I approach that with my clients. We're not just going to buy trucks because you got the money and credit to buy trucks. Right. What is your plan? Do you have a lane for it? Do you have additional work? Are you diversifying the freight in your business, and to say, hey, this truck is going to be power only because right now I have this one dedicated with a dry van on it, and you're diversifying your freight. But we need to know, do you have a driver already lined up? Like, we need no downtime. So we're asking all of these operation questions. And how much more is it going to cost your business every month to add the additional equipment? So it's like, how much are your expenses increasing, and what's the projected revenue in this? And do you have some reserves for this truck that we're now bringing on? Interest rate. How are you going to get it? Like, are we leasing, financing this vehicle? What tax benefits will you get from doing this? So it's a lot of questions, not just the ability to say I have the credit and I can go get it, or I have the cash and I can go get it. And I will tell everyone right now, cash is king, so hold it.
Oh, yeah, man. If you not saying no lie about that. One of the things that I can appreciate the conversations that you and I have had, the conversations just, and how you speak to your community, you're such a no nonsense person. Like, when it comes down to accounting, and this is all seriousness. Like when you have people in your circle, when you're establishing as an owner operator, small carrier, when you assemble your team, if I hire the Vanessas as my accountant, Vanessa's on my team. I don't want to surround myself with a bunch of and yes men and yes women that are just going to say the things that I want to hear. You need to hear those things that you need to hear, those things that you don't agree with, because you'll grow further when you're stretched beyond your own level of comfort and agreement, because you're seeing things at a different perspective. And when it comes down to the money side, and here's the thing about small business owners, you got to wear so many hats. You got to wear chief marketing officer, chief, tech officer, you got chief financial officer, chief executive officer, and every day of the week, all of those hats has to be worn by somebody. You can't take one day off. And the one thing I appreciate the fact is that you're giving a no nonsense approach. You're not in here to give the woman fuzzies and be favored, because at the end of the day, your bank balances are not going to give you a warm and fuzzy if you don't treat it right. So those are things that, and I'm glad you kind of came from that perspective, specifically around scale, because a lot of people scale based on what we're seeing on the spot market. Like, oh, well, rates are getting better, I can add more trucks. Well, you know what? That's a bad strategy. And I'll say that to anybody. That's a bad strategy, because there's so many other elements and components that come from that. So from your perspective, at what point should a small carrier start considering hiring an accountant instead of trying to do everything themselves? Obviously with money at that as a focus. At what point do you think a small carrier should say, hey, you know what? Let me bring in a Vanessa or accountant that I'd like to bring onto the team. What point? When should that play out?
Well, first, I'm going to say they should definitely bring on a Vanessa. Right? Now, from the beginning, because not only understanding your financials from the beginning is going to set you up. Having an accountant is much like having a good driver. Really it is, because the driver keeps the truck on the road for you and is going and it's making the money, it's making the revenue. Your accountant is making sure that your financials are organized, that you understand what your business is doing financially, where you're measuring with those KPIs, and then also helping you know what your tax liability may or may not be. Now, in the capacity that you bring your accountant on in the beginning, now that could be different. If you want to meet with someone on a quarterly basis, a monthly basis, a biweekly basis, of course, the more, I would say this, the larger the fleet, um, the frequency in which they meet with their accountant is higher, right? Of course, because they now have the revenue to support that too. But in the beginning, you want to talk with an accountant to make sure that you have your accounting system set up. And I would say for us, when people are coming in with one truck, we do offer a service. So we teach them the very basics, right? We teach them enough to not hurt themselves, right? So that they can check in with us on a quarterly basis, because the worst thing you want to know that you want to know too late is two things: that you're losing money, and that you actually have a profit that you didn't plan for when it comes to your tax bill. And sometimes, I've met so many people that have been so passionate about their business, it's whatever it takes, whatever it takes. And they end up bankrupting themselves because it's a whatever it takes, and they can't see exactly how much they're putting into the actual trucking company. So I want them to understand, as much as you're putting into the effort and the knowledge, to understand what it takes to run that company.
Now, you talked about another interesting component that, I wanted just to touch on a little bit, which I think is really, really important, especially from an establishment perspective. You hear all the time, when I come in as a new carrier, typically they're going to establish an LLC and start a trucking company based on the LLC. Well, then you see ads and you see these people saying, "Hey, you should start an S corp, versus C corp." Tell me a little bit about your perspective on what that looks like from a trucking carrier perspective, because you mentioned your tax liability and how we could lower that.
I would say that everyone needs to let's stop going to Google and YouTube and Facebook Real University to determine what our business structure should be in our business. Definitely speak with a professional or go out to the IRS's website because all that information is there. So understanding your business structure is going to be monumental into how you leverage tax strategies and how you actually pay. Now, it is always my recommendation that no one starts their business as an S corp or C corp, right? One and out, not to get very deep into it, but with an S corp, one of the very top requirements is that the owner or owners of the S corp put themselves on W-2 payroll. So if you're starting a brand new trucking company and you started as an S corp, you don't have any money. You have failed that very first test because you can't pay a salary to yourself, right? But as setting your business up as an LLC, you have the ability to later, when it makes tax sense, to have your business taxed as an S corp. C corps are double taxation. It will take a let's sit down and really discuss why you believe that should be your choice.
Now, one thing too that I think that between small carriers that becomes an interesting back and forth, and you and I have had conversations about this before, and I always appreciate your perspective on that. You have small carriers, less than 5 trucks, less than 10 trucks, 1099 versus W-2. And when you talk about taxation, you talk about liability and putting yourself in harm's way. What's your perspective from an accountant standpoint? What's your perspective on, hey, I have 10, obviously that's going to stir up a different conversation, but what's your perspective on that?
My perspective is the IRS guideline. So the IRS has an ABC test. If you are ever concerned about if someone should be a W-2 or 1099 that's driving your truck, you definitely want to refer to the IRS ABC test. Now, I will tell you now, typically it is very common in this industry for all drivers to be 1099. Um, but one of the slide lines. This is people always come for me when this part comes out, right? When someone is an independent contractor and you're 1099 in them, that means that they provide their equipment for them to complete their job. You are providing the truck to the driver for the driver to um, complete their job. That's an employee.
And there's no limits of liability when it comes down to enforcement. If it ever came down to it, hey, I might have to go back. And if Vanessa was working as a 1099 for me for the last 2 years, I might have to go back and pay 2 years worth of liability when it comes down to it because there's no limit.
And you may, if I've seen this happen a time or two, maybe 3 or 4, that a driver was issued a 1099. There was some type of disgruntlement, and the driver went to file for unemployment. And the unemployment commission or the Department of Labor got involved and realized that the driver was misqualified. Well, misqualified or as a independent contractor when they really were a W-2 employee. So the Department of Labor went back and made that trucking company pay payroll taxes on all of the money that was issued to the driver as a 1099. So just keep that in mind that while it's common, we want to make sure our classing our drivers correctly when it comes to independent contractor, which is 1099 versus employee that receives a W-2. And just for clarification, if you are classing a driver as a 1099, do not use the word employee because they are not an employee if you're doing that.
Yeah, none of your documentation. That's 100% correct. So, just from a money perspective, while we're still on the money topic, what's your take on factoring? I think, obviously that's going to be another one of those conversations depending on it. Necessary evil, most carriers using it wrong. Like, what's your take on factoring? Because you hear a lot of people in that discussion.
It could be a cost of doing business, right? Definitely when we start thinking about cash flows and using that cash flow statement, a lot of people are using factoring companies to help them with cash flow. And depending upon what your rate is, commonly anywhere between 2.5 to 3.5%, I've been seeing that happen. But it has been very vital to a lot of companies and how companies have been able to survive. It's very common in the industry. But when we start looking at how much money you're spending on factoring, this is where, your financials come back into place, right? We're looking at your interest and your commission fees that you're paying on that stuff. It may be cheaper for you to get a line of credit with your bank, at a 1% or 1.5% that you're not using all the time. You're drawing on it when you need it. But this also is pushing trucking companies into a place as they're starting to grow. Now you're becoming different because now you're invoicing your customers directly and you're giving them payment terms. If it's net 10, net 20, net 30. So that's also something that has to be considered because you don't want to make that shift from factoring to billing your customers directly and not have not have cash on hand to hold you over for whatever those net terms are that you're now giving to your clients that you're billing directly.
And the funny thing is a lot of times that, and I could be wrong, but a lot of times you look at a carrier that's spending, 2.75% on factoring on a good year, you could be paying $5,000-$6,000 in factoring fees. And those fees sometimes get left off is that one of those fees that can be used as a tax deductible? Is a tax deductible to where we can take that? Is that a missing deduction?
That is a very often missing deduction, but for us, it's definitely on our end of the year checklist. We want your factoring statement, big time.
Hmm. And you think about, you multiply that times 5 trucks, man, that's a significant amount of money that could be left on the table.
But not only that, I wanted let's dig into the factoring statements just a little bit. When they have a recourse contract and they're not paying attention, so they're not looking at what's being withheld from them. Or we're just looking at, "Oh, I'm getting my deposit every day," but you're not looking to see that, X, Y, and Z company never paid them. So now they're reserving some of your payout because of that. So I want to encourage everyone to at least, again, on a monthly basis, let's add that statement into one that you need to be reviewing too. Look at your factoring statement every month to see if there's been any recourse, if there's been any reserve. And if it has been, maybe it's time for you to jump in and contact that companies like, "Hey, you haven't paid these invoices and I need you to pay them."
So as we go through, and that's a great example, and as we start to wind down today's show, there's so much that I wanted to talk to you about today, but the time goes by so quickly when it comes down to it. When you talk about those common tax mistakes for an owner operator or a small carrier, when you look at, and you've done this for a long time, what are some of the common tax mistakes that you see that if you could say, hey, for 2025, I want all my small carriers, I want all of my owner operators to not do this over the next 30 days, what would those common mistakes be?
Commingling. Stop doing your personal things out of your business account. That is eating up all your cash. Stop doing that. Stop being unorganized. I really need you to understand that your receipts are going to help you. They are going to help you. And the third thing that I need you to not do is like stop ignoring your finances. Stop ignoring your finances. Stop relying on your bank balance to make you help you determine whether your business is doing good or whether it's doing bad. It's time for you to have an intimate relationship with all the finances in your business, not just your bank balance.
And if you had one piece of financial advice that could save a struggling owner operator's business today, what would that piece of advice be? Just coming from a perspective of an accountant.
Let's see. It's going to go back to the finances. It's time to do a deep dive in your finances. It's time to do a deep dive to figure out what the issue really is in your company. It may not be that your company isn't making enough money. It may not be that you don't have a good driver. It may not be that you don't have equipment. It could be a combination of things. A deep dive into your finances is necessary. It's never going to go away. It needs to be done more than just at tax time, and it's going to be outside of the carrier looking for freight. Understanding your business financials, it runs neck to neck with it. neck to neck with it. Because if you can't find good rates, or even if you are finding good rates, but you can't tell where your money is going, you're basically losing anyway, and you're setting yourself up.
I know that's right. I know that's right. How can carriers work with you if they're interested in getting their financials in order, just from the ones that have listened to this podcast?
So you can work with me by going out to my website, which is provisionaccountingsolutions.com. And Adam, I did provide you guys with a link where I have an ebook where it's talking about the 10 mistakes that most fleet owners make that drive them out of business. And I really think that that will help. That ebook will help a lot of people not make some mistakes in their business. And you can also follow me out on Instagram at I am the money architect. And I drop a lot of information there when it comes to trucking, when it comes to bookkeeping, accounting, and your taxes.
Well, Vanessa, it has been an incredible time just chatting with you again about money, and I love to have that discussion. Obviously, the biggest thing takeaways from this discussion is just having organization, getting your finances in order, having those tough conversations, and building the right teams around you to ensure that you're financially responsible when it comes down to this industry. Because the flow through of money, as it flows through trucking, flows through very, very quickly, and it's important to maintain those KPIs. If you haven't subscribed to the playbook at this moment, get subscribed. We do classes like these every 2 weeks. We'll do classes every 2 weeks to make sure that you understand those KPIs and you're digging in to your business from a business perspective. Let's go ahead and save some businesses as we move forward. Vanessa, always a pleasure. Thank you for joining us on the long haul today. And for all my listeners, make sure that you like, share, subscribe, and send this out to as many people as possible that you want to save. Have a great time, and we'll see you on the next long haul.